In the Money Metals Exchange article titled "The Curious Case of Languishing Silver Prices," writer Clint Siegner explores the perplexing situation of silver prices. Despite a persistent structural deficit between silver's supply and demand, silver has languished. The metal is increasingly difficult to find and produce, while demand continues to rise. Strangely enough, none of this has seemingly been reflected in the price. Silver continues to languish despite its persistent structural deficit between supply and demand. The metal is becoming more difficult to find and produce, and at the same time demand is on the rise. Yet none of these factors seem to have influenced its price. The paper silver markets, where the price is typically set, have been stuck in a range since early 2020. It's important to remember that supply and demand are economic laws that can only be circumvented temporarily. Nevertheless, the law still applies. According to the Silver Institute, the all-in sustaining cost, or AISC, for producing silver jumped by 57% year over year. The industry average is now estimated at $17 per ounce for 2023. However, some data suggest the attributable cost of producing byproduct silver from other mines like copper, zinc, and lead mines is much lower. Many firms, including one of the world's largest primary silver producers, face costs much higher than the average. Pan American Silver reported an AISC of $26.55 per ounce in the fourth quarter of last year. That was more than $4 per ounce above the average price they received. Nearly all miners saw their margins take a beating in 2023. While costs surged, the average silver price was essentially flat year over year. Silver mining stocks have been decimated. The Global X Silver Miners ETF has fallen from a high of $49.65 in August 2020 to $23.33 at Friday's close. Given the challenging environment for miners, it is no surprise that silver mine production keeps falling. The deficit between supply and demand was 140 million ounces in 2023. When you add the deficits in 2021 and 2022, the total is 474 million ounces. That three-year deficit is significant. It averages roughly 15% of the total annual production of just over 1 billion ounces. And the Institute estimates the deficit will be 180 million ounces this year. There are some questions as to the accuracy of publicly available silver inventory statistics. For example, some argue that JP Morgan Chase, who acts as both the custodian of the 100+ million ounces held by the iShares Silver Trust, SLV, and about 130 million ounces of COMEX silver, is reporting some silver bars in both places. Most would assume these inventories are different. Investors who hold shares of SLV might be interested to know whether the silver owned by the trust is also shown as eligible in the Bullion Bank's daily report of COMEX stocks. While that question should be easy for regulators to answer, analyst Ted Butler has been waiting months for a reply. The delay is not encouraging. Should the deficit between output and consumption persist, it is hard to see how the value of silver won't move higher to draw out new supply and/or curb demand.